Welcome back to Business Mastery for Startups, Scale-Ups, and Early Stage Businesses with your host, Jerry Gadori. That's me. And on this week's show, we have a CPA, one of the evil finance legions, Melissa Hertell. Longtime listeners to the show will know that as a sales guy, Melissa and I are natural enemies. So in all seriousness, though, Melissa is awesome. She and I met through a wonderful entrepreneur community called Thrive. And her business is focused predominantly on providing financial services to small businesses, in specific to the HVAC community. So there's a lot there to talk about there, a lot that I love. But Melissa, I'm sure you could do a better job describing yourself and your business than I just did, other than accepting the mantle of evil person.
Not an evil person. Although the IRS and some state agencies might think so when they fight against me, but that's beside the point.
Well, that's a good thing.
Yes, exactly.
They're the eviler persons.
Haven't lost yet, knock on wood. But yeah, I work with HVAC, plumbing, electrical, home renovation, basically home service companies. I work with them all. And
Awesome.
the reason I picked that is because my dad was actually a carpenter and a diesel truck mechanic. And so as I was growing up, that kind of always stuck with me. And my brothers both also run construction businesses. And so that's the reason I picked that as my niche.
Oh, that's awesome. And I would imagine, I don't know this experientially, but I would imagine that the details of the things you have to understand from a finance perspective are different from business you support to different type of business you could support?
Yeah, so if you're doing plumbing, electric, home renovation, you're going to start focusing on things like supplies and stuff. Whereas with like something with tech, which is, I worked there for 5 years in that industry. I chose it. I did not choose it because it's a little more complicated, but that's predominantly focused on like your product team and your employees, and that's where your cost centers are. So each different niche or each different industry you go into has a little bit of a nuanced things that you have to look for. And with my guys, it's supplies, pricing, and that sort of stuff.
That makes a lot of sense. Would you say that when it comes to small business in general, is there a foundation that small businesses should be looking out for, or is it wildly different?
No, the foundation's all the same for all of them, especially starting out. Most of the companies, when they come to me, haven't done anything. So when I ask them, where are you spending your money? How much money you're spending? I get deer in headlights look. And I find out that they've never even really looked at their bank account. They're just looking at the cash that's at the end balance and spending. And so I start to dive in and start showing them where they're spending their money, how they're spending it, how they're pricing, what those jobs look like, if they're profitable. We start to get into that nitty gritty stuff that they have no idea about when they came to me.
Well, I will say my CPA labeled me as his worst client, and he's not a young man. So I beat a lot of people to earn that title. So I think on today's show, we'll be relying on you for information and help, and maybe me for an anecdotal story, because you and I have talked about this in the past. I view finance, accounting, and taxes as sorcery and alchemy. So, and like the founders you described, I also have the wrong-headed mindset that there's no accounting mistake I make that I can't sell my way out of. So to this point, I've been okay, but I've had some real close calls.
I would doubt that you were a worse client, but you never know. I've had trash bags full of receipts brought to me at tax time, like within a week or two of the deadline. So I don't know. You'd have to tell me exactly why he thinks you're the worst. But yeah, usually
When I'm not recording, I will.
Oh, okay. No evidence. Okay. I could just contact your CPA. But... Yeah, usually what I find is that people think it's a necessary evil and that you can't really gain anything out of it. But when I start kind of delving into the numbers and showing a client that I can actually tell them what's the most important thing to them, just where they spend their money within a couple of months and watching trends, they start to get a light bulb, and it starts to kick in for them why they should look at their numbers and what they actually mean. And then once we start going to what their goals want, what they want their goals to be, and the different things that they can do to get there, And then if they say I want to be $10 million, but they're only at 750,000, and I show them all the different levers they have to pull and how much work that takes, then they back off on their goal a little bit. But I let them kind of decide that by looking at the different things they have to do.
Yeah, growth, I like a strong goal, but I don't like goals that are unachievable because I think that it conditions you to accept failure. Um, Let me ask this. What steps should an early stage company or a small business or maybe somebody just starting out from a setting up their accounting perspective, what types of steps should they be taking?
I always tell them to go with a software. I mean, I know some people really like spreadsheets. That's fine, but with a software, and you can usually get some for free. Like Wave Accounting has a free one, Puzzle.io, depending on how adept to software and different technologies they are. That one's a good one. I actually put stuff on that one. Um, there's some that are free that you can use, and it'll actually feed in your bank account and make it very easy for you. And if you make it easier on yourself, you're more apt to do it. So just going in, coding things, and starting the process is really what you need to do.
Hmm. And once they've got that software, is it pretty intuitive or are there things that they should be setting up?
For the most part, those softwares already come prepackaged with the things they're going to need. It's already got accounts in it for like insurance and that sort of thing. So they should be able to just plug and play. They might come across a couple of things where they might get a little hiccup, but any accountant should be able to walk them through it. Both of those softwares are very easy to navigate.
Hmm. And are there beyond tracking their inbound and outbound money? Are there any other things from a financial perspective they should be setting up that early stage? Any systems or anything like that?
Definitely use something for invoicing. I don't recommend paper invoicing at all. Now, I know some of the older guys in my niche really like the paper invoicing, but you can't track what's paid, what's not if it's not in a software somewhere. So I always put them in, whether they want to or not, into some sort of like QuickBooks, Wave, Puzzle.io, just for invoicing so I can see when a customer's paid or not. And I've actually found with one of my clients, there was an invoice that hadn't been paid in 2 years, had no idea. Thousands of dollars, had no idea.
Yeah, my programs are invoiced through Kajabi, and then my consulting and other work is done through QuickBooks.
And Stripe has one too. I'm pretty sure Stripe is free that you could use if you really wanted to and take payments through. I usually like to look at to the what they're going to charge you to actually take payments through them. So QuickBooks isn't too expensive. Wave's a little more expensive on that merchant fee side, and I think Stripe's probably one of the cheapest between all three. So
Yeah, Kajabi uses Stripe on its back end. I found there's not a huge difference, and alas, my numbers aren't big enough that the difference would matter, unfortunately. But yeah, no, that's definitely good advice. How about their expense tracking? So things like bring a client out to dinner and, being on the road and forgetting some things and having to run to local Lowe's to pick them up, that sort of thing.
So bringing a client out to dinner, that's definitely tax expense. Keep track of it. Write down who you took out and what you talked about. And then things like QuickBooks have an app. You can take a picture of it and actually upload that receipt to it. That's one of the things that the IRS likes to fight you on because they don't seem to think meals and entertainment, or well, entertainment's not, but that meals should be deductible. So they're going to fight you on it. But as long as you have it, like you took your team out and it was a Christmas party or something like that, as long as you have it documented, they won't fight you on it. You can just hand them the receipt.
Gosh, not as much now, but earlier in my career in the 90s and early 2000s, there was a strong expectation when you were wooing an account that you were taking them out to steakhouses, that you were, I mean, you were doing expensive things.
Yes. And I do have a client that does that. They just hosted or sponsored a golf game to get a client. And I think they spent like $10,000 between the meal and everything. So I do understand it, but it's always going to have a documentation of who it was, why
Yes.
it was there. And that way, if the IRS asks, you're not like, well, I think it was. You have who it was, what it was for. they like to fight that one.
Yeah, no, 100%. I'll say also a lot of the associations that I've either been a part of or worked with in the past, if you're a vendor that wants to do business through them, meaning you want to speak at their events or you want to be able to attend and have high access so you can reach folks, in order to do that, it's kind of pay to play, meaning that
Yep.
you've got to sponsor at certain levels in order to get that opportunity.
Yeah, and even one of the associations I'm in with the construction management financial association, that's all they do is hound me with emails when the golf game's coming up to please sponsor a hole, and I'm like, I'm yeah, not gonna get that money from me. But
Yeah, one of the veterans groups that I belong to that supports the government contracting space, they have different member companies sponsor each hole or pay for their round of drinks at a certain hole and that sort of thing.
yeah, and see, I would do something like that for a veterans association, but this is just why would I sponsor a hole for a bunch of financial people that they're doing the same thing I am? So that's the only reason
For a
I
lot
don't.
less, you can do it for this veteran.
Yes.
Uh, in all seriousness, though, so we want to set up our whatever accounting software we're going to
Yep.
use. We want to make sure we're tracking our inflows and outflows of cash.
Hmm.
How about categorizing? Is that super important at a smaller stage of where things, what groups they fall into?
I mean, yes and no. There's going to be times where you're not really sure, but as long as you put something there when your tax accountant or whoever looks at it, they can move it wherever it needs to be. It's not quite as important. Um, if it's something like a loan, though, that you're going to want to make sure you put like this is a loan. That way they know to look at that in more detail as the accountant when they go to do your tax stuff, because there's certain things that
Meaning
are
like a line
deductible.
of credit type of thing?
So kind of like if you buy a vehicle, like my guys buy vehicles for their business, when they get those loans, there's a portion of it that's just for that payback of the loan and a portion of it that's for interest. The principal part of it's not deductible, so your tax accountant's going to look at that and they'll be able to separate it very easily for you.
Gotcha.
So as long as you put that as loan, they know where to look. Whereas if you put it somewhere else and they're not quite sure, it might get missed. The other good thing to look at is there's a bank rec feature or a bank reconciliation feature where you just go and
Mhm.
match it to your bank statement. And that just makes sure that the software didn't accidentally put in two of something that you didn't actually spend or that you didn't actually get in cash.
Yes, I noticed that my QuickBooks has bank account reconciliations and credit card reconciliations.
Hmm. And a lot of people
So,
don't do those.
yeah,
Excuse me.
I could do better. I promised myself that I'll log into QuickBooks at least once a month, and I could do better. We'll leave it there. Uh, so you've been doing this for a long time. We've got kind of get the basics about setting things up in software. What mistakes have you seen, obviously without naming names, what mistakes have you seen that you could help steer other business people away from so they don't make them as well?
So a lot of my guys, because they're just starting out, when they come to me, I find that they're mixing personal and business all over the place. And that that makes it a little harder for me. Now I can go through and comb through it, and I've done that for clients. I'll go through 3 years of stuff, comb through it, do their taxes, and we're good. But you're making it very hard and very expensive on yourself if I have to do that for you. So I always tell them like if you want to use a personal card, that's fine, but do just business on that personal card and nothing else, because otherwise you're going to get confused and not know what's what.
I have heard those words before, and it's
Tough.
possible that I own multiple companies with investors in one of them and not in another. And it's also possible that I know exactly what you're saying.
It happens all the time. I don't judge. I'm going to laugh at you, but I won't judge you.
Yeah, my CPA I think was crying more, but so I can definitely see commingling being a problem, not just from a financial view, but from a legal view, because the less separation there is between pools of money, the more access legal attacks can have to all of them.
Yep.
So there's an
And when
additional layer of legal problems there, is at least what I was told by my CPA 100,000 times.
So, yes, if you have an LLC and you're doing that, like I can give you the law definition of it without going into it because if a lawyer's watching, they can take my CPA. But it's called pierce the veil. Ask your lawyer.
Yeah.
So I don't recommend you commingle it, especially if you get an LLC, because at that point, why did you buy? You don't your LLC. You're paying 250 or more for every year for nothing.
Yep.
You're just giving the state money. But it also helps when the IRS does an audit. They can try to say something's personal that's actually business because you're commingling. So that way it just forces them away from being able to fight you on something. And I know because I've had to fight them a few times.
Yeah, no, 100%. Thankfully, knock on wood, almost 30 years of doing this, I've never been in a legal problem or in an IRS problem. So again, knock on wood, that doesn't change because I have no interest in getting involved in the courts or in the government, especially in the only part of the government that seems good at what it does, like the IRS. So what other mistakes do you see small business folks make or early stage founders that maybe don't understand this part of the business?
Probably the other one is taking on way too much debt. Now, with HVAC, plumbing, electric companies, they're buying trucks. They're trying to get contractors in trucks or employees in trucks. And they don't really look at the number, they just go and spend. And they don't talk to me first sometimes. We find out after. I fix it, but you really have to know what you're going to spend and actually look at your cash flow so that you can plan for that. So if you're just going out and buying this truck that's got $1,000 a month payment, you've got insurance, you've got gas, you're not looking at any of that stuff. You're just looking at the truck payment, whereas I'm looking at everything. You really have to sit down and look at all the costs that go into that. And a lot of people don't. They just look at the truck payment and they're like, okay, I can afford that. Let's go. No.
So that's a great example of what I was talking about earlier. In full disclosure, I don't recommend this. I acknowledge it's a mistake. But I see something and I say that's going to cost $25,000. So I break that down and I say I need to bill X hours per month to pay that, or I say to myself, I have to sell Y of this to pay for that. And I say to myself, I can do that, therefore it's not a big problem. So yeah, that's definitely an error. I acknowledge that. So let me ask you another question, kind of in the same vein. I would imagine then that keeping certain levels of operational cash or cash reserves is something that you look at as well. Is that as easy as keep X percentage, or how do you talk to owners about that?
So it's really dependent on what they want to do for goals, how much we keep. As far as like taxes, my rule of thumb is like 30%. Try to keep 30% of your profits in another bank account so that you
Mm-hmm.
don't touch it, especially for something that's not like an S corp. And that way, when it comes tax time, you have the money to pay it and you're not scrambling, needing me to put you on a payment plan and that sort of thing. And plus, it gives you a little cushion. Normally, you're not going to be that high, but it still gives you that little bit of cushion. And then for, excuse me, for employees, I usually try to keep payroll and stuff in a separate account as well. And that way, the business owner isn't even looking at that. So anything that's coming up within the month. For general, I usually say 3 months. 3 months of cash flow, like your cash burn normal, which most of my guys are seasonal. I try to tell them to keep at least 3 months saved up for the just in case. But for that's just like rule of thumb, but normally I'll get real deep depending on goals, what they want to do. Are they looking to hire, buy trucks, and that sort of stuff.
Mm-hmm. And as far as debt instruments, I know, of course, you don't want excessive debt and you don't want bad debt, but do you recommend any particular financial instruments for companies like a line of credit or things like that? Or
Yeah, I usually recommend the line of credit almost always. Just it just gives you a little cushion. You don't have to use it. I often don't recommend you use it. Just have it in case you need it, especially if you're doing really well, because it's even harder when it's in a low season and you're not doing as well to get the bank
yes,
to open that for you.
yes. And is there a particular size you recommend, or the biggest line they'll give you?
Usually I'll say the biggest line they'll give you. If they're going to give you way too much, probably I'd say probably around 3 months of like your expenses, employees, all of that. I would say that's probably your cap. It's probably not a bad idea if they're going to give you more than that, but if I see that you spend more than you should be spending, I'm probably going to tell you to open less just because I know what's coming.
I know some industries are very short term cash intensive. Like, for example, in technology staffing, you've got high pay and bill rates. But if you're dealing with very large companies, often the payment terms are very long. It's not unusual to see 90 days. I even saw one account that was 180 days. So when your payment terms are that excessively long, in my opinion, for any of you folks out there in long payment term land who disagree, we can fight about it in the parking lot. But if you're a contract, now keep the math easy. If you're a contract staffing firm and you're paying somebody $100 an hour, that's $4,000 a week, $16,000 a month. And if you've got 90-day terms, you're $48,000 in the hole before you get your first $4,000 check. It'll be
Yep.
more than four because of markup and stuff. But you understand what I mean. So
Hmm.
you're $48,000 in the hole, getting your first $4,000 check. It doesn't need to be said, but I'll say it. You can't put too many folks out to work doing that if you don't have some type of line of credit.
Hmm. And a lot of when my clients come to me, a lot of them haven't even set up sort of like a payment term with clients or with their customers. For the predominantly like HVAC, electric, plumbing jobs are going to be fairly quick. It's probably going to be a week
Mm-hmm.
turnaround, not quite as big of a deal. But for my home renovation guys, we're talking sometimes they'll go 3 months in a job. So I have them set it up so that they take a portion of that pay up front and then a portion of the customer's money towards the middle so that that way they're not buying hundreds of thousands of dollars in supplies plus contractors and then not getting any money.
Yeah, many moons ago, I think I shared this story. I was a sales manager for a home improvement company, and our terms were for cash jobs. It was half when we signed and half when we finished. Then when they puked on that, as they always did and rightfully did, it was half when we signed. I'm sorry, a third when we signed, a third when we started, a third when we finished,
Yep.
and then for any type of, so it was common for folks to get home improvement loans, and because we did so much of it, we proctored a lot of that. We had relationships. The terms varied, but it was some form of pay us now so we can at least cover the cost of the materials, pay us when we start, and then hold on to the final until you're happy with how it turns out.
Yep. Yeah, and some of the guys that come to me, they're just waiting until the end, and I'm like, I don't know. What if
Yeah,
that
I would
client would
never expect somebody I'm working with to do that, just like I would never give them all the money up front and hope. you
exactly?
know Yeah, I think the middle ground's a healthy ground. So we've talked about systems, we've talked about software, we talked about cash reserves, we talked about doing better at this than I do. Um, if you could give, really any business owner, early stage or not, small business owner, one piece of advice from a financial perspective, like kind of a most important thing, what would that be?
Track, track your stuff. Like just even if it's in a spreadsheet, put your expenses and your sales in something, just so you can look at it because you don't know if you're even charging the customer enough. You don't know if you have enough money to cover all the supplies and stuff you're buying for that job. Just anywhere, start it. I don't even care if you put it on a piece of paper for me, but just start.
Yeah, that makes a ton of sense for a lot of different reasons. The one most obvious one is that you're not going to remember. We all like to think that we will. The lie we tell ourselves is that I don't need to write this down, I'll remember. But a week, a month, a quarter, a half, a year later, you're not going to remember. And if you ever do need to answer that question, you won't be able to. But you bring up a secondary point that might not be as dramatically important, but long term is probably more important. And that's that by tracking everything, you can look for trends in your data that can influence the choices that you make. I
Hmm.
mean, gosh, I guarantee that you've seen this. Somebody thinks they spend all their money on X, but when you look at the numbers, they might spend money more often there, but they spend more actual money on Y.
Yeah, and a lot of my so when my clients come to me, they're like, I don't think I'm pricing enough. I don't have any cash flow. And so I'll break it down for them. And 9 times out of 10, they're actually charging enough. Like the gross profit's there. They've got it for that project, whatever they're doing, bathrooms, whatever. HVAC. It's there. It's that all the stuff underneath that they're spending money on. They had no idea they had it. Subscriptions for stuff they shouldn't have because it's personal and they have it in the business.
Mm-hmm. No, that's awesome. So what do you typically engage with companies from their day one, or do they try to rough it out for a month, a quarter, a year before they come to you? How does that usually work?
Probably 75% of my clients, when they come to me, have already been in business for a few years and they've been trying to do it and they just can't figure out why they don't have any cash in the bank. And that's why they come to me. And they've never done anything. Or they might connect their bank account to Wave and they've looked at it, but they've never actually went in there and done a whole lot with it.
Mm-hmm. So when you're talking to customers, well, let me say this differently. If you could wave your magic wand, when does it make the most sense for a company or a person to engage with you?
I mean, if they are able to at least put their stuff in a software and kind of start coding it so that I can do their taxes and start helping them, then I would say 2, 3 years in, or once they start seeing a real jump in their revenue or sales, then that's probably a good place. But if they're not doing anything, just start with somebody, let them do it.
Yeah, I'll tell you a quick funny story. So way back when I first started, I didn't use QuickBooks or anything. I just used a Google Sheet, and I bought one of those accordion files, the portable accordion files, and I have like 14 or 15 pockets. I put one for each month, and whenever I get a receipt, I put it in there. I got to the end of the year, and I opened it up. In the first couple months, the receipts were almost blank. The ink faded on them. And I later learned that like cash registers, that ink doesn't stay. It like fades off over time. And after, working through that with my accountant, from that point forward, I would take a picture of it and save it in a Google Drive account for that month. So there's a digital copy of every single receipt that I gave. And then after a while, I graduated QuickBooks, then QuickBooks Online and all that stuff.
I've seen that before.
Yeah, that
Nothing like getting a trash bag.
Yeah, that scared the heck out of me. Opening it up, and I basically had small slips of blank paper, or mostly blank paper. So that was unhelpful.
That trash bag I was telling you about, yeah, it had some of those in it.
Yeah, gosh. I am simply too OCD level organized. I'm a little bit of a neat freak to be able to ever not. The idea of a trash bag full of documents makes me feel uncomfortable. I just couldn't do it.
I mean, I'm an organized person, so I just dump it out and start organizing it. It's just naturally who I am.
Yeah. So that's awesome. So I think we've learned a lot today. Anything that you'd like to add from an accounting perspective for companies that would think you would be useful for them to know?
I think a couple of things that always come up for me is someone will ask, do I have to be an LLC? No, you don't. You don't have to go and register. I mean, you can talk to a lawyer and ask them if that makes sense for you. But when you're first starting out, yes, it's great for the legal protection side. And I say talk to a lawyer about that, but you don't have to do it. Like, it's not in order to start a business, you have to be an LLC. But I hear that a lot. You can't be a business till you're an LLC. But I just want to say that's not true. And the second one, go ahead.
I'll say on that topic real quick, I think that might be a little bit business dependent, because I know in the tech world, and this is Microsoft that found this out the hard way, if you bring somebody on in an I-9 capacity because they don't have an entity to bill through, yes. Then there's some gray area there. Microsoft lost a massive lawsuit to a group of employees that didn't have an entity to bill through and should have been classified as employees. So because of that, a lot of companies won't work with someone who doesn't have some type of legal entity to bill through.
That's true. Yeah, Tech is a little bit of a different beast. And like I said, that's one of the reasons.
Every conceivable way of the word.
worked for multi-million and billion-dollar tech companies, and that's the reason I didn't niche in it. It's a very complicated world. And I do have one client that's been with me since this was my side gig, and I keep them, but I don't do the fancy uh, other stuff with them. So,
You wouldn't think I love tech for as much as I bash it, but the reason why I bash it is there's so many idiosyncrasies that make no sense in the tech world that I just can't wrap my brain around. But for real, I love the tech industry. I love technology and the innovation, but there are some things you're just like, why do we do it this way?
yeah, and from a tax perspective, it gets even more complicated, which is the reason, like with me, with a smaller firm, until I grow this into the CPA firm of the future that I plan on, it's not the time. Maybe in the future, I'll take on tech clients and start talking about research and development tax credits and all that sort of thing. But yeah,
Yeah, I
no.
would say honestly, I mean, at least while you're flying solo, you couldn't possibly capture all of the blue collar companies in your area and be able to do it, let alone add other things. So, I am a huge advocate of niching. You becoming the queen of home improvement companies, HVAC companies, things like that, is a much more interesting story than you're the corner tax lady.
Yep, exactly. And plus, those are just my people. Like
Yes,
when we get down and we start sitting down and you start to get to know me and like who I am, F-bomb flaming, whatever, it doesn't bother me. That's just my
yes.
people. So that's one of the reasons I also picked them. And I would
Well,
say the
that's awesome.
second,
You had a second thing?
yeah, the second one is I get asked a lot about becoming an S corp. There are a bunch of nuances to that I strongly recommend that you sit down and ask a, an accountant about. And it's not just about the tax stuff. You have to think about cash flow because you have to pay yourself and you have to pay yourself a certain wage. They call it a reasonable wage for the IRS. They also make it very gray area and not blatantly obvious what you should pay yourself on
Shocking.
purpose. I know. And so I get asked that a lot. And then I have clients that come to me that their tax accountant told them to become an S Corp, and we deep dive into their stuff, and they should not be an S Corp. And then I have to unravel everything their tax accountant did. So ask a lot of questions and know that you will have to pay yourself through payroll on a regular basis. So if you don't have the cash flow for that, don't do it. Don't do it for the savings and tax. It's not worth it.
Yeah, I in one of my companies, I'm an LLC billing or taxed as an S corp, and in my other company, it's an LLC, but there's an investor. So from a tax perspective, we're a partnership.
Partnership.
So I can't pay myself a salary in that. I can only
Correct.
take disbursements. So
Yes.
yeah,
Yeah, and it's the
which
same
I
thing if,
wish I'd known before I started paying myself a salary in that.
oh, you did. I had a client do that too. So don't, it's,
Yeah, that
like I
was
said, I
last
don't
year's
judge.
problem. Yeah, I had used Rippling to so I could offer benefits to my employees, but we needed another person. So I said, "Oh, I'll sign up." Well, in order to be a person, I had to pay myself a salary. So I just paid myself a low salary and didn't think anything of it. And then it came tax time. My CPA was like, "You can't pay yourself a salary. You're a
Nope.
partnership." And I was like, "Oh crap."
Again, that's something I've had a client come to me with the same kind of thing. I'll unwind it, I'll fix it. I'm still going to pick on you though about it for a little while just so it kind of burns in your brain a little, like, let's not do this ever again. But we do it in like a nice,
Yeah,
nice joking way.
I'm pro humorous bullying. I use the same methods with folks I work with. So listen, this has been a great show. I thank you very much for being on, Melissa. Let me ask you this: if folks want to learn more about you and more about your company and service, where can they do that?
Absolutely. They can find me on LinkedIn, which I'm on there 3 times a week posting some stuff. Sometimes it's funny, sometimes it's a little dry. Tell me if it's too dry for you. And then also my website, and they can email me, which will be below.
A dry finance person? Talk about a walking
Sometimes.
stereotype.
I know. You should hear my joke.
Yes, I use I believe strongly in the educate, joke, and offer advice thing. So I try to do a mix. I have my Sunday funnies that are just silly. Then I tend to post fairly seriously, but my comments I usually are snarky.
Yes. I usually focus in the comments, but that's because somebody told me my joke wasn't funny.
Well, disregard them. Listen, again, I thank you for being on the show. Everybody, as always, between this week's show and next week, continue to be awesome and build great things. And let us know in the comments, which I trust that you're going to leave, and in the reviews and in the likes, which I trust that you're going to leave, if you'd like to have Melissa back on the show. Thanks again, Melissa.
Yeah, thank you for having me.